Energy transition is easy to understand. We can see it, we can feel it, we can smell it, which is that, migration, I'm breaking it for our viewers, solar to or hydrogen to solar, or, from fossil fuel to largely clean and green. It's easy to understand. So you buy a company which is in manufacturing, you buy a wire company, you buy a capacitor company, you buy a tower company. Aerospace is a slightly more complicated space because for a common man, you would say aerospace either is defense or it is Boeing or perhaps it is Airbus. Demystify it for us.
So first of all, energy transition 2 years back was as complex to understand. Today it has become easier to understand.
We're making it simple every day, Ravi. Sometimes media does a good job.
But in aerospace, if you actually go and check what Boeing CEO has made a statement today, they said that they are going to recruit more vendors from India over the coming next few years. Now that is a very telling statement. Now what has happened is in civil side of the aerospace, there are basically only two manufacturers, two OEMs, Boeing and Airbus. Boeing shot itself in the foot and Airbus failed to capitalize on it. Now they are running behind schedule in terms of delivery and they are constrained by capacity, and that on top of that their supply chains have gone disarray post COVID. So they are desperate to find vendors who can supply to them, and they really don't care about what margins you make as long as you supply the equipment to the specs that they want at the rate. If you can supply that reliably, they will not bother you about the pricing. That is the kind of pricing power these supply chain vendors are going to have. So again, it is a very simple thing to understand. The deliveries are running 3 years behind schedule. There is a backlog of as much as 20 years, the kind of order book that these OEMs have, and they are in need of supply chain partners, and all their European partners or the American partners, they don't have the ability to scale up from here.
Okay. Tech enablement. It's easiest thing to say, but very hard to scale up, right? We've seen great success stories, but we've seen a lot of failures here. How are you approaching this entire tech sort of, enablement?
So I think that's a fantastic question. Number one, I think we are not here to fund your land grab. That's not what we do. We invest in business models which are developed to the point where they don't burn cash. So we come in at a point in time where it's already, if not PAT profitable, EBITDA profitable and cash flow throwing. So all they need is some capital to scale up what they have perfected over a period of time, the model that they have perfected. So that is the differentiating fact about the kind of companies ValueQuest invest in, and as against probably what other business models are out there. See, we between the potential and the probability, we tend to focus on the probability. There should be a higher probability of making money than a higher potential of making money. Of course, who doesn't want the combination of higher potential and higher probability? But most often than not, if the potential is high, the probability is low. So you need to balance that between high potential and high probability.
Fantastic point. So let's wrap it up with one question on the valuations in general in the private equity space. There was this whole ringa roses which had started. You come in at a private equity stage, wait for the company to go public, wait for mutual funds to come in terms of anchor, and then you sell at the IPO pop. It had almost become a sequence, but that sequence has reversed. Have private equity valuations also corrected in sync with public markets?
So private equity obviously corrects with a lag, and it probably takes a longer time because the prices are not quoted. Honestly, though now there seems to be some sort of a market for every share, so there can be some reflection of that. But honestly speaking, it will take some time. It's a mental adjustment that the promoters have to make, the bankers have to make, the investors have to make in terms of what multiples that you are willing to pay. And some correction has already happened and some more will happen over a good period of time. But thing that comforts me the most is, even from the listed market perspective, is that there is no leverage over here. We are not talking about a severe downturn in the economic cycle. We are talking about high valuations getting corrected. And I think, as mentioned earlier, I think we are through with the most of the journey on the correction of valuation, and hopefully the same will get reflected in the private equity side. For us, we have a runway of next 3-4 years to invest. It's not like we have to invest today. It's a much different timeline that we operate in the private equity world. So yeah, I mean, I'm glad that this correction has happened. some rationality will come back into the valuations.
If you like this video, then like, share and subscribe to ET Now.